Bank statement loan, the qualification process is very similar to a conventional loan. The main difference is how we calculate your income. So instead of using the tax returns to calculate your income, we're using bank statements. So whenever I'm going over qualifications, the three main things that we're looking at are credit, income, and assets. Credit for a bank statement loan, typically you need about a minimum of 600 credit score. If you do have a lower credit score, you're going to be required to have a higher down payment. So the credit score is going to determine the down payment. The next piece is income. Income determines how much you qualify for. Even on the bank statement loan, we use a debt to income ratio to qualify. It's about 50%. Your total monthly expenses can be no more than 50% of the monthly income that we're using. And that's how we determine the maximum that you qualify for. Now, to come up with that number, we'll collect 12 to 24 months of bank statements. They could be personal or business, wherever your business deposits are going into. The last piece is assets. We kind of touched on this a little bit because the assets is your down payment, your closing costs, and then reserves. So down payment is going to be determined by your credit score. Closing costs are going to be a little bit higher on a bank statement loan than they would be on a conventional loan. Last piece are reserves. Reserves is money that you have left over after closing to make your monthly payments. So typically the banks want to see 3 to 6 months of reserves that you have left over in the bank after closing to make those payments. And that's all you need for assets.